Hey, what's up, everyone? Today's the 13th of January, 2024. You guys can see the article right here from INC Incorporated. Hertz is dumping Tesla. Why is very bad news for Elon Musk? The company will take a $245 million hit to reduce its EV fleet. Boom. One of the biggest car rental companies in the United States is trying to reduce their EV fleet. They're trying to dump these Tesla cars. Why? Because back in 2021, you guys can remember, here's the article. Hertz made a big bet on electric vehicles, saying it would buy 100,000 Teslas. It was such a big deal at the time that it sent Tesla's market value to more than $1 trillion market cap. $1 trillion. One of the biggest car rental companies is trying to change their fleet over to more EV vehicles. Oh, that sounds great at the time, right? In 2021. Yeah, we're trying to change our vehicles from gas guzzlers to being more environmentally sound, saving the environment. Let's go to EV. Sounds pretty good, right? Well, they wanted, talking about Hertz, they wanted to convert more than a quarter of its fleet to electric vehicles. The idea that one of the largest rental car companies was making a huge investment in buying Teslas meant that more customers would be exposed to those EVs on a regular basis. Hey, that's good for Tesla, right? If you come in and you rent a Tesla for a couple of days, you get to fill it out. You get to see how it drives. You get to see how it feels. Not bad, right? Because if you end up liking a Tesla, more than likely when you want to go out and buy your own personal vehicle, you might look at an EV. A Tesla vehicle. Not only did Tesla get to sell 100,000 vehicles to Hertz, but each of those vehicles would be driven by hundreds of renters over the course of the year. Not bad. It's kind of like test driving. Instead of you going to the actual dealership to test drive a Tesla, just go rent one from Hertz. And if you like it, feel good about it, go out and buy you a real one. Hertz is selling off many of those vehicles because it's no longer worth it. Instead, it plans to replace them with gas-powered vehicles. Why isn't it not worth it from 2021 to now? They're willing to take $245 million hit just to switch back to gas. It's not worth it. Let's look at the article as the reason why. Hertz said it plans to sell approximately 20,000 electric vehicles from its U.S. fleet, or about 1/3 of a global EV fleet. Hertz's statement goes on to say that the move is meant to eliminate a disproportionate number of lower margin rentals and reduce damage expense associated with the EVs. Yeah, that's the problem right there. They told you, Hertz told you the problem is that it costs too much to keep these vehicles maintained. When a Tesla vehicle breaks or when you need a part to repair, it's more expensive to get it fixed. Yeah, it's good when the car comes off the lot, it's brand new, you don't have many parts breaking. But as with many rental car companies, the individual who rent these cars usually tear it. They abuse it because they know it's not their own personal vehicle. So when Hertz get these vehicles back, they find damage, they find scratches, they find repairs that needs to be made. And they found out that, dang, these Teslas are too expensive to fix. That's one reason as to why they're cutting these EVs. Sometimes you do one thing thinking it would be good for the business without considering the negative effects it could have on your business down the road. This is what both of these two businesses failed to do. Hertz, short term, felt good to go ahead and buy 100,000 EV vehicles from Tesla. They didn't think about the long term though. Like, you still have these vehicles on your lot. You still have to maintain them and fix them when they break, because a broken down vehicle is a liability for a car rental company. They need to put these vehicles out on the road because that's the only way that they can make money. It cannot make money sitting on the lot. Same thing with Tesla, as we're about to see in the article. they did not, well, at least Elon is not thinking long term. For most of the last year, as sales lagged, Tesla cut prices. Wait, hold up. I thought Tesla is supposed to be the EV vehicle of the world. Like everyone wanted to put their hands, wanted to buy one. If that was the case, then Tesla wouldn't have to cut their prices. So in order to induce more people to come in and buy these Teslas, Elon's like, I cut prices. Let's bring people into these dealerships because we got to sell these vehicles. Cut prices. Wait, hold up. If you're cutting prices, then what about the people who originally purchased your EVs? Like Hertz, for instance. They came through and purchased $100,000 EV vehicles from you at higher prices. And now you're going to undercut them because you want to cut prices to keep your short-term sales up. You want to keep the sales up. Wow. Again, like I told you, Elon is not thinking long term because he's not thinking about the people who purchased these Tesla vehicles years ago. Because what if they want to resell it? What if they wanted to sell it to someone? You want to have your cars maintain resale value because that makes people more confident in that what they're buying is not going to lose value drastically. There's some cars who, once you drive it off the lot, loses 10% of its value right off the bat. There's others who maintains the value because the manufacturer created a process that keeps the values up, that keep the cars from breaking to where they don't need to be maintained as often or maintenance as much. In some cases, talking about Tesla cutting the prices of their EVs, it lowered the base price by as much as a third. The idea is to try to get more people to buy his vehicles. I get it. But you're not in that same business as, like a regular retail store who buys a bunch of clothes. And you need to have a sale to get these clothes off the shelf, to get the product moving. To some extent, it worked. The company reported an uptick in sales during the fourth quarter as a result of those price cuts, as well as an incentive to buy an EV before tax credits expire this year. So short term, like I said, it looks good. It worked out. But what about the long term? Because if you cut prices now and people can see that I could buy an EV for $45,000, this is the price cut. And then later on, 2 years from now, you raise the price back up to $60,000. No, people will want it at that price of $45,000 or less. I'm getting the same vehicle. So why would I want to pay more for it? The thing is, Tesla's aggressive price cuts over the past year have meant that the resale value of those vehicles has decreased significantly. Yeah, you can't sell it as much now. If he's reducing what he's selling the vehicle for off the lot and you want to resell it, he's already restricting you in how much you can actually get from the car. Because nobody will want to pay more than what you can get a brand new EV for, especially a used one. If you're a company that buys a ton of vehicles and the value of those vehicles falls substantially, that's bad for your balance sheet. Going back to Hertz, they got 100,000 of these mugs sit on a lot. And here you are, Elon Musk cutting the price of the vehicles. So that already tells you that Hertz is taking a massive hit on their resale value because they're not going to keep the cars. They may keep it for a year or so, and then they try to resell it. Hertz does. Well, Elon Musk just hit your back pocket that fast just by cutting the prices of the cars. It's crazy. Not thinking long term can really jeopardize your business. This is a mistake that Hertz has done when it said they wanted to purchase 100,000 Tesla EV vehicles. Why 100,000? They're trying to replace their fleet. Remember? Their fleet. Rental car companies hold on to vehicles for just over a year. That means that they're incredibly sensitive to wide swings in prices. If you buy a car and the resale value drops because the company is suddenly cutting prices, that's not great for business. The fact that Hertz says it will take $245 million hit to its balance sheet as a result of selling off the vehicles tells you that the cost of keeping those vehicles was greater than that. They would rather take $245 million hit than them keeping the vehicles on a lot, because just maintaining them obviously was going to cost more. Part of that cost, according to Hertz, comes from the fact that Teslas in particular are more expensive to repair and parts can be harder to come by than your standard fleet car. Yeah, because everyone on the road don't have an EV vehicle. You can probably only go to a Tesla dealership lot to get the parts. Like, you cannot go into an AutoZone or Advanced Auto Parts and pick up these parts because they're not readily available. A lot of cars don't use these EV parts. So if you need an electric part that's only being manufactured for one car company, Tesla, yeah, they will be hard to come by. And then you got to think about how many other brands are producing these parts. Can you get an off-brand? Or does it have to be a Tesla-made part? Which also will increase the price, because Elon knows that. He knows that when something needs to be repaired, you cannot go to your local auto mechanic and he could pick up a part for cheap. You got to go back to the Tesla dealership and pay an arm and a leg just for this one part and get it fixed there, because these mechanics don't have access to the tools to fix EVs like that. Hertz attributed the push to reduce the number of EVs in his fleet to an effort to lower what it calls damage expense. Man, I can imagine how much they're bleeding in terms of keeping those EV fleets up. There is some degree of irony that Tesla is lowering prices in an attempt to boost sales of new cars by enticing new buyers, which is the reason why you lower prices. It's because you're trying to bring more people into purchasing your car, while at the same time alienating existing buyers by making their vehicles less valuable. That is where Elon is not thinking long term. If he continues to cut these prices of the EVs, yeah, you're going to bring in new people, but then your existing base, the ones to where they have already purchased their Tesla, is looking at you like, wait, hold up. You mean I could have waited a couple of years and I could have got this mug cheaper? Yep. Sometimes waiting is a benefit. You don't have to be one of the first ones to go out and buy EV because Elon and Tesla is at the forefront. Just kick back and wait. You're seeing it right before your eyes. Prices will come down. Like all of these Cybertruck enthusiasts who wants to be one of the first ones to get a Cybertruck, understand they're paying too much for it. The same way that Elon is lowering prices for these Teslas, he's going to lower the price for the Cybertruck, especially once the sales dry up. So just wait. He's in the business of moving cars. And the way that you move cars is by reducing prices. So all of those Cybertruck people who's riding around acting like they cool because they got one of the first Cybertrucks must have not read this article, because they will be the one looking ridiculous once Elon lowered the prices of those Cybertrucks. They're paying too much for it. The problem is that he doesn't appear to be thinking about those unintended consequences, and that's a very bad sign for someone leading the most valuable automaker on earth. After all, it turns out that even unintended consequences are real, and it's going to continue to hit Tesla. Look, here's the chart. Okay, we're looking at Tesla here on the 2-week time frame. I did a video on the price of Tesla on the 10th of January, and I told you all then, I said I might need to leave this price prediction and actually play the market move to the downside. You go back and listen to it now, it's still there. I should have did that. I should have listened to my conscience and said, look, cut this price prediction out the way because the stock is weak. And looking at the chart, it looked like it goes lower now. So what we're going to do is we're going to cut this price prediction out the way. It didn't work out. we did hit that first target. You guys can see this sell zone up here at the top. Price did hit it on December 28th, 2023. And ever since then, it's been a cascading effect down. So much so that the buyers in Tesla at this buy zone did not even come through and support price. Scary. So now let's go ahead and cut this out. Let's go ahead and fix up the chart because we are going to look for Tesla to go down. Now, our attention, seeing that we're looking for price to go down in Tesla, is going to be here as a target. And then here as a target. These are buy zones. This is where I'm suspecting that we're going to see an increase of buying, or at least people trying to enter the market and try to support the price because they think that price is on discount. Just like when Elon lowered the price of those EVs, you want to come in and buy it. These are those two zones at the bottom. Okay. Sad part is that when you look at Tesla's price on the chart, it looked like it could go a lot lower than 200 on the long term. Back here. Okay. So let me show you what I'm talking about. Here it is on the weekly time frame. When you see an indicator on a longer term chart, you got to pay attention. What's going on that weekly bar right there? You're right, weakness. So maybe you could see these buyers hit the market and test around 210, 206. What about on the 2 weeks? Look at how the market in Tesla closed on the 2 weekly chart. Close on the low. So maybe not 206, maybe 200. These 2 weekly bars is giving me pause on how strong this stock is. Here, 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 and then this last printed one. Test on the 3. 6 more days. Like you can see pretty much in the same price range, all of this weakness in Tesla. Right here in this whole range. Like, why are we seeing so much weakness in Tesla in this range? Yes, price has been supported, but we're still seeing the weakness. That is why my target is going to be around 210 to like 206 first, back down to 200. Because like I said, it's been supported. But if it wasn't supported, Tesla would have already been trading around 160, 140. It would have already been down there by now. So basically, there's enough demand here in the stock that is not allowing the stock to crash. Here it is on the 5 weeks. Test on the monthly and 5-day chart. Here it is on the 3, 2, and the 1. So I'm actually done. Let me go ahead and put on this newest idea that I think Tesla is trying to move, the price, the stock price. And here are the targets. First target is in our first buy zone, anywhere on the buy zone, either at the high or at the low. Okay. At the low is 5.86%. At the high of that first buy zone is like 4.13, $210. Okay. That's our first target. Second target is going to be at the high or the low of the second buy zone. At the low of the buy zone, 194.50 is like 11.6, let's just say 11%. And then at the high of the second buy zone, we're going to look at like 10 and a quarter. Okay. That's where we at. And as long as Tesla's price trades below, let's do this as a sell zone in Tesla. We're going to go ahead and look for this to be a sell zone, meaning that we're expecting selling to increase at this point. We're going to go ahead and utilize that as our resistance point. Okay. So that is it. I am done. Make sure you maintain the profitability. And as always, trade different.